hopefully you're looking for a home this year. You've been gearing up for it. But guess what? Before you can make an offer, before you identify a home, there's 5 things you just have to know or have to have in place before you can do that. It's vital. And so I'm going to go walk through all those 5 and show how important it is and how I can help you with each one of those steps. So if that's important to you, let's kick off this rodeo right now. Hi folks, I'm Kevin Fagan. I'm the Mortgage Patriot on your side, nestled here in the hill country above San Antonio, Texas, serving all you proud Texans and all you great folks all around the country. So it's 2025, as I mentioned earlier. You've been putting off maybe a home for a while now, trying to figure out what's going on with rising rates and so forth. But we've settled in now to more historical norms in terms of rates anyway. And I want to give you the 5 things you just really have to know, you really need to do or know ahead of time before you can start really getting serious about buying a home. If you would please, before all that, hit the like and subscribe and maybe comment if you would, because I've got a lot of great content. I have videos on, maybe the best loan program to use for your circumstances, and even topics like how to reduce your cash to close down to very small amounts, $2,000, even $1,000 on substantial $300,000 purchases. So lots of things there. Again, hit the like and subscribe, and let's get into all that content right now. So the very first thing you must do, and you might already guess what it is you have to get pre-approved. You have to get pre-approved, because even if you want to submit an offer, the listing agent, the representative of the selling party, is going to say, great, submit your offer and make sure that you include a pre-approval letter. Well, obviously, if you're not pre-approved, then you can't submit an offer. So you've got to do a pre-approval. And even if you're looking at a home to purchase 3 months from now, 6 months from now, 9 months from now, you want to go through that process now. Why? Because we need to discover some potential things that might be showing up on your credit report that you're not even aware of. So for example, you might have a 800 score, and you might be a high wage earner. You can buy basically anything you want. But I've seen cases where you try to buy a home, the loan officer pulls out the credit report, and yeah, you've got an 800 score, but guess what? You've got some trade lines on there that aren't even yours, because there's a name that's very similar to yours who's created some kind of issues on your trade report. They're going to stall the whole deal. And it takes months sometimes to try to work out these errors on your credit report. By going through the pre-approval process now, someone like myself can identify potential errors that are on the credit report and eliminate them within a short amount of time, so that you're going to be prepared later on down the road. That's critical that you do just that alone. So related to that, but even more common, is the fact that, let's say you have low 600 or mid 600 scores, at least by what someone like Credit Karma might be telling you. And by the way, Credit Karma and like services, they kind of overshoot on their scores. They tend to be a little bit high because they're not using the same algorithms as the 3 trade bureaus, TransUnion, Equifax, and Experian. And so you need to know that. But more common, like I said, is you need to know that there might be some collection items or even charge-off items that either you are aware of or you thought maybe were taken care of, that we have to discover ahead of time. Because even though your scores might be adequate, you might end up not being able to do a deal because these collection and charge-offs are getting in the way of trying to do a transaction. The underwriters will not let you go forward if you have a certain amount of collections or a certain amount of charge-offs and so forth. So we really have to identify those way ahead of time, months ahead of time, so again, that we can work on them and have yourself ready when the time comes. So with my pre-approval, I'm going to do a couple of things for you. One is I'm going to run what's called a soft pull. I'm going to do a soft pull review of your credit. I'm not going to do a hard pull. Hard pull is what gets you into small trouble, lowers your score a little bit, maybe not as much as people think, but it does lower your score. And more importantly, it triggers all kinds of marketing leads, meaning that information is sold to all kinds of companies around the country. Next thing you know, you're getting literally dozens, if not 20, 30 calls or texts on the phone, driving you crazy, telling you, hey, I understand you're looking for a loan. And they start giving you all kinds of low ball and bait and switch offers. You do not want that. A soft pull review, which I always do at first, gives me all the information I need, gives me your scores, does not hurt your credit 1 point, and does not trigger any marketing leads. So I do a soft review for you. And then, of course, I'll be producing a pre-approval letter for you. And what is that going to look like? Well, that's going to give you the upper boundary, kind of the upper boundary of the price points of the houses you can look at. Now, don't worry, because 80% of the people aren't ready at this point to be purchasing. And that's the whole purpose of this video, is to show you all the steps you got to put in place. So this very first one is important because I'm going to give you a track to go on, a pathway, a strategy to maybe we're identifying certain credit cards we need to pay down, maybe certain collections that you need to attack, either in terms of disputing or figuring out how to negotiate and so forth, and or possibly savings amount per month to build up that savings nest so that you're ready to with the cash to close when the time comes. So I will deliver to you not only the pre-approval, but we'll go over the strategy on how to get you on track and what that's going to look like. So the second thing you must know or must do before you buy a home in 2025 is you have to know what your closing costs are. The actual check you're going to write at closing, what is that going to look like or approximate? And it's not just as simple as, well, I'm buying a $300,000 house and I'm getting an FHA loan. I know that's 3.5%. So I'm going to probably come out of pocket for about $10,500. No, there's actually three buckets. I like to talk about the three buckets all the time. Your first bucket is your down payment bucket, which we just said 3.5 on an FHA loan, could be more for a conventional loan. And the second bucket is your closing costs. That's your processing, your underwriting, your title fees, your government recording fees, your appraisal fees. List goes on and on. You need to know what those are. And bucket number 3 is your prepays and escrows. You got to prepay 12 months of insurance, and you have to escrow probably 2 more months of insurance and about 4 months of property taxes. So all those factors are going to go into that closing cost figure, the actual check you write, and I can help you walk you through that, help you understand what that's going to look like. So I'll give you that number. I'll give you the high-end number of what it's going to look like, but what I call without any help. And I'm going to show you what the impact of down payment assistance and seller concessions will be on that number. So you'll have a number that says, without any help, it's going to look like this. And with down payment assistance and seller concessions, it would look maybe like this. So I'm going to give you both scenarios. It'll give you a really good, comfortable feel for, okay, this is the worst that's going to happen to me. And if Kevin or someone like him can get me down payment assistance and seller concessions, then it should be a lot lower, maybe this range. Hope that helps, but that's got to know cash to close. That's number 2. So the third thing you really must know or do is to explore all your down payment assistance program options. And I can help you do that. Now, there's thousands of them, so no one could possibly know them all. They exist on all levels. The federal level, as in national programs, you have state programs, you have county programs, and you have city programs, believe it or not. So for example, let's say you're in Houston, Texas, and you say, well, you've heard that there's a $10,000 grant or program available, and that may or may not be true. But trust me, the further you go down the line on national, state, county, or city, more strings and more conditions apply. You may or may not find out if you're available for it. I can do that for you. Quick answer is most of the time, as long as you don't make too much money, probably 9 out of 10 times I can get down payment assistance. The question is going to be, how much is it going to be for, how does that impact your rate? Because a lot of down payment assistance programs actually raise your rate. So it may not be advantageous for you. So we'll go over all those options and I'll show you every bit of them. So you need to get pre-approved. You need to know approximately what your cash to close is, and you need to know what down payment assistance programs might be available to you. The fourth thing you really have to know is you have to have somebody that can shop rates for you. So that sounds a little obvious, but if you go to one of the big banks like a Wells Fargo or a Bank of America, they only have their rate. If you go in there and say, hey, can you show me the top 25 rates that you might have for a conventional loan right now? They're going to look at you like you're smoking something. But someone like me, who's a loan officer, it's a broker, we have agreements with over 150 direct lenders across the country. So I can literally shop for you to get the best deal. You're always going to win when somebody's going to shop rates for you. Just that simple. A direct lender will not be able to do that, but a loan officer who is affiliated as a broker can help you, and I'll do just that. So the very last thing you really must know or must do, and it's as important as any of them, is you've got to have a good agent, an experienced agent that understands how to do 2 things. They got to be able to negotiate, and they have to be able to structure a proper offering. Because when you've gotten pre-approved and you know what your costs are going to be and all the things we've already discussed, and you're ready to buy a home and put an offer in, you really need somebody that knows what they're doing. It's just that simple. My team, I've got agents all over the country that I work with, and I'm holding their hands and structuring those deals for your benefit so you can maximize things like seller concessions or any other incentives that might flow your way and minimize your cash to close so that you can come out of pocket for the very least amount. And if you've got an agent that you want to work with, that's fine. But I need to be integral with them and talking to them about, again, how to structure these contracts. There's a QR code here. Hover over that if you like, and that'll set up an appointment with me. I'll get you pre-approved so we can get a game plan for you. We'll figure out kind of what your closing costs are, any down payment assistance are available to you, and I'll be able to shop when the right time comes for a rate. And we'll talk about, if you already have an agent or if you need one, we'll talk about how to educate them so that they're working properly for you and maximizing all your benefits. Hope this has been of help to you. I'm Kevin Fagan, the Mortgage Patriot. Have a great one.